Next week could be one of the biggest weeks of the year. My name is Blake Morrow, and you are listening to the Week Ahead video, and you're probably wondering, well, why could next week be one of the biggest weeks of the year? Well, you know what's coming up. Highly anticipated jobs report next week. But it's not just the jobs report. We got the Bank of Japan rate decision. We've got, like I said, the jobs report. We got earnings from Microsoft, Qualcomm, Meta, Apple, Amazon, Canadian elections, Australian elections at the end of the week. And then on top of all of that, we have tariff and trade war headlines that are going to be coming hot and heavy. You know it. So I'm glad you guys are here. Like I said, you're listening to the Week Ahead video. I'm going to take you through all of the pertinent information that's happening this next week. So stick around. We're going to get to all that and more right now. So I always say, if you want to follow along on the calendar, you can follow along on the calendar here and see what all the data is coming out throughout the course of the week. You can adjust it right on ForexAnalytix if you want. I'm going to just kind of quickly go over what's happening this next week, and then I'm going to go into some of the charts that I think really matter for next week. So, starting off with Monday, we have Canadian elections. Everybody assumes that Carney could win, but Poilievre, outside shot. If we do see him win, then next thing you know, you've got some Canadian strength probably coming your way. Tuesday we have the JOLTS data. On Tuesday night, we have Australian CPI, Chinese manufacturing. So that data could move the market. I will go over the Australian dollar. Don't worry, because the Aussie is the Chinese proxy as well. Wednesday, we have ADP, Canadian GDP, US advanced GDP, PCE data, and then we have earnings from Meta, Microsoft, Qualcomm, and Caterpillar. Wednesday night, which is Thursday morning in Japan, it's the BOJ rate decision. The market's not looking for the BOJ to move, but they could give us some good guidance, and that could really move the yen, especially with all these trade talks that are surrounding the US and Japan right now. Thursday, we have unemployment claims, ISM manufacturing data. We also have earnings from Apple, Amazon, and McDonald's. And then Friday, we have non-farm payroll data, and we have earnings from like some energy companies like ExxonMobil, Chevron, Shell. So busy week. And then, like I said, at the end of next weekend, we're going to have Australian elections, which could be a market mover as well. So, I'm going to get into the charts, what I believe are the charts that matter. I'm filming on a Friday afternoon. It's about noontime in New York, lunchtime. So hopefully we're not going to get too much volatility while I'm speaking. But, just remember, on ForexAnalytix, you can actually go through 30 different instruments. We say our name is, ForexAnalytix, but we cover a lot of different instruments, whether you're talking about the S&P, you're talking about Bitcoin, crude oil, gold, boons, the 10-year, Ethereum. We cover a lot of different assets, and in our chat rooms, we pretty much cover everything. But I'm going to go through some live charts, which I think are really important, that are going to matter to you guys. So let's start off with the euro, because the euro has been really the primary focus this week for a lot of currency traders. With the euro, it's definitely going to be on the move this week because of all the economic data that's coming out, especially when you're talking about the jobs report, but all the other, data that's coming out, like the ADP, the JOLTS data, weekly unemployment claims, and GDP too, on top of that. The thing about the dollar is going to be very sensitive to economic data, especially if we start to see a weakening of employment, which I'm not going to say that we're necessarily going to be getting, but we're getting close, and we've probably been getting close now for the last month or so, with some of these government jobs starting to seep in. Some of the government job losses starting to seep in, whether it's unemployment claims, whether it's in some of the jobs reports that we get. So just pay attention to that as well. But what you'll notice about the euro is we're perched above that 112.70. We've talked endlessly over the last couple of weeks about that support. We're closing not too far away from that lows, But notice how the euro's really worked off its overbought conditions. Now, I am in the camp that the euro is still bullish, but I am starting to think that we're getting towards a tradable high, whether that level comes in at 116.50 or above that. And I'm going to do a little bit of work here for you. If you do this high to this low, and let's put an extension on that. If you look at these extensions, we're basically stopped up at the 127% extension right now. That's basically capped us. We get above that, you're talking about a move from 116.50 to the 117.50, which is a long-term 78% retracement, 161% extension of one of these smaller moves. And then beyond that, you're talking about a 120, which is the long-term triangle resistance, which is in black. I don't think we're going to be reaching up there per se, but I think those are levels we need to start looking at as we get closer, as we start getting towards that 115 level, especially on any type of breakout. But I'm going to be getting into that during the top 3 trades of the week. Yeah, if you guys don't know this, I give you the top 3 trades of the week. I review last week's trades. That's at the very end of the video, so make sure you all stick around for that. But that's the euro. Now, the one thing I want to say, and if you go to ForexAnalytix, you just look at our bias chart. A bias chart is something that I do every day with our community of traders. So this bias chart is built every day by me personally with you guys. We find what the key levels of support and resistance are for these different instruments, and then also we annotate how important they are with an asterisk, and we identify the bias. Now, just because the bias is bullish in the euro doesn't mean that we don't short the euro. I will short the euro, but knowing that it's in an upward trend or the bias is still bullish just suggests that I should be taking smaller positions whenever I'm shorting the euro because I'm fighting a trend. That's all the bias chart is really telling us. But the reason why I wanted to bring this up today is you'll notice that all of the dollar pairs, and let me remove myself really quick, all the dollar pairs that you see here, they're not all tilted towards dollar bearishness. You can see, currencies like sterling, the Aussie, they're starting to hold up a little bit better. The dollar yen, it's stopped going down for now. Now, that doesn't mean that the trend has necessarily changed, but what that means is we're seeing a shift underneath the market. And if you want insights like this, make sure you join the ForexAnalytix community. And I didn't mention this yet, but we have our liberation offer. This is the lowest price that we've given our monthly subscribers in about 5 years. We did that specifically right after Liberation Day. We know that these tariffs are going to usher in higher prices for everybody around the world. So if you want to take advantage of it, this is a limited time offer. Like I said, we've backed up our prices for about 5 years. It's for $3 a day. $3 a day. You could be doing this analysis with me every day, listening to our private shows. You could be in the chat room. You could know exactly where I'm buying and selling. You can know where other traders are buying and selling currencies. Right here in the trades room, we have our general chat room where we're talking about the markets all day long. And so take advantage of that liberation offer. Okay, back to ForexAnalytix. Reason why I point this out is because when you start looking at the euro, the euro is still really bullish here, but the sterling, you'll notice that we had a throw over in this channel. Now, we talked about this channel this last week, and we talked about it being bullish if it broke out. Well, it broke out and it couldn't sustain. So now that we can't sustain the breakout in sterling, we have to be very, very careful. Should sterling get back below the 132 level? Because if it does, that means that sterling is probably going to be building the dollar is going to be building some strength against sterling, which could, in essence, give the dollar some strength as well. So just keep that in mind with the dollar. It's not all, we're not looking at the dollar and saying the dollar is weak across the board. No, it's quite opposite. We're seeing dollar strength starting to seep in certain aspects of the market. And so that's really important. I wanted to go over the Aussie. I told you I'd go over the Aussie. The Aussie has been a really tough trading instrument this week. As you can see, as we're in this very, very tight trading range. Now, you'll notice, this is, by the way, this is the morning edge charts. These are the charts. I'm so sorry. Usually I use my subset of charts for the week ahead video. So I'll start drawing on these because these are the charts that you guys, we've been talking about. Remember, we have shows, these are the charts right here, the morning edge. These are the ones that you'll see me use every single day. You'll also see them in the analysis. So when you're looking at ForexAnalytix and you go, okay, you know, the analysis on the Aussie dollar, you're going to be looking at this chart, which is the same chart as you see here. It's the chart that I upload every day, and I actually add to this information every day. When I talk about the week ahead chart, which is right here, these are the charts that I use specifically for this video, and I don't alter them until you see me this next week, which we are right now. So last week we talked about the Aussie getting really bullish above the 64 cents, but you know what happened is it could not build on that strength. And so as I just showed you in the last chart, we're in a very tight trading range this week, and this tight trading range, I believe, is going to lead us to a breakout, which will take us above the 200 DMA. That would be very, very bullish on a breakout. But if we break down, that's going to be pretty bearish as well. You know, I think a lot of the Aussie really hinges on what happens with China. China. Yes, what happens with China? There's a lot of interesting information this week where Donald Trump says, I talked to Xi on the phone, and China says, we haven't had any communications from the US. And I have to ask you guys, because I asked our ForexAnalytix community today, and you can jump down in the comments below and let me know. But who do we believe? Do we believe China, where they're saying, wait, US, you guys have never even reached out to us? Or do we believe Donald Trump, who says, oh, I talked to Xi on the phone? Now, I'm sure there's a little bit of truth to both sides, but it could be both sides gaming each other. But the problem is, us as traders, we're taking in this information and we don't know what to do with it because we're seeing two vastly different stories. So the point was made by Ryan Littlestone today on the Face Show. Remember, our Face Show is the free show. If you want to catch us live every morning, you want to get an updated view of how I feel about the market, or how Ryan or K-Man or Dale or Steve, how we feel, just jump on one of our two free shows. We have the Flow Show, which is in European hours, which I listen to when I get up in the morning. I actually listen to the recording. And then we have the Face Show, which you're going to catch me on every single morning. It's free to attend. Click this link right here, these green buttons. Click those little green buttons to register and join. And so this way you can actually get an updated view instead of listening to me once a week. But the point I'm trying to make here with the Aussie is Ryan said today, he's like, look, we're going to have to see that a deal has been signed, sealed, signed, and delivered before we can actually take a really big view on the Aussie. But I'll tell you what, the Aussie is really prepped. This could end up being one of the biggest weeks of the year. And it's not just due to the data that I've gone over, you know, whether it's the BOJ, Canadian elections, all the earnings, yada, 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 the jobs report. It's what happens with the US and China. Is there progress on trade? Have they actually talked? Are they making inroads? And if not, it's going to show up right on this chart. So keep your eye on the Aussie dollar. Very tight range, and the breakout could be massive should we see one. Now, since I did mention it, let's talk a little bit about the US dollar, Japanese yen. I'm going to come back to the Canadian. The dollar yen, you know, we talked about it last week. We had this head and shoulder pattern. Do you remember we talked about it? And actually one of the trade setups was, well, if it breaks through 139.50, we're going to get on the short side. Well, we held 140, so we never even broke down. Now, what we're doing is we're actually challenging the underside of this broken trend line. So the dollar yen is at a very tricky spot too. Just like the Aussie, it's in a very tight trading range. The dollar yen is at the upper end of this trading range right here. And a breakout above 145 would be pretty bullish in my view, because that means that, you know, the US and Japan have probably worked out some trade deal, and as a result, the yields go up and the dollar yen rallies as a result. The flip side is we could see a move lower in the dollar yen below that support if the trade talks break down, and we would see the yen probably strengthen for a couple of different reasons, whether it's risk aversion or because the BOJ is actually hawkish on the BOJ meeting on Thursday morning, which is actually Wednesday night in the US, but Thursday morning in Japan. So keep your eye on the dollar yen, because I think the dollar yen is setting up for a big breakout as well. Now, I mentioned I'd go back to the dollar CAD. Well, the dollar CAD is in breakdown territory. We've talked about it over the last couple of weeks about getting any rally back to 140 or 139.80 to be on the short side. Well, it's done that. I mean, it's kind of rallied and kind of stayed under pressure. But one of the things I want to point out here, and we could really go intraday, you'll notice that as we've been selling off, relative strength has been firming, right? So we're back to neutral in relative strength. So from here, really, you could argue that we could go up, we could go down without much of an issue. But I'm going to draw something else for you that's drawn in some of our other charts. Let me show you what charts I'm talking about, and then I'll come back and draw it. So if you look at the dollar Canadian and you have ForexAnalytix and you read the daily analysis, you see this, right? We were following in this descending channel, and that descending channel looks like this. So the reason why I point this out is because while we're in this channel, you got to think that downside might actually be somewhat limited, while we're in this channel. Now, I'm not saying that we can't break down, we can't fully break down, but I think the reason why we break down would be the election. Now, should Mark Carney win and become prime minister, I think the risk is now that the dollar Canadian breaks back above 140. But the flip side is if we start breaking in new lows, again, this is one of those situations where we're really starting to form some decent ranges that can give us a good indication of what we need to do in the days ahead. So keep your eye on the dollar Canadian. And then one of the last things I wanted to talk about as far as currencies go, I do want to talk about the dollar index itself. Remember, not all, here's a term or a phrase that I use all the time, but I want to use it with you guys right now, is not all dollars are created equal in this move. Meaning that just because the dollar index is moving higher or moving lower doesn't mean that it's going to be moving higher or lower against every single currency. So take what you see here in the dollar index with a grain of salt. But I do want to point this out. The dollar index is holding below its breakdown point. You can see it right here. But the fact of the matter is if the dollar index breaks out higher back above the 100 level, 100.20 would be really bullish. We could start seeing a major recovery. I have to admit, I had a conversation with Jim Welsh, but we've been talking about this daily for the last week, really on our free face shows, that dollar bearishness, I don't want to say we're at peak dollar bearishness, but sentiment right now is pretty bearish for the dollar. Sentiment. Everybody's discussions about the dollar and where the dollar is going to go and what's happening with the dollar is not bullish. All right. As a result of that, that doesn't mean they're wrong. That just means that short term we could see a recovery as the whole world is leaning dollar bearish. And like I said, I just did a video with Jim Welsh of macro tides, and he showed us a picture of COT, the commitment of traders positioning, which is showing an extreme bearish sentiment, which means that you have a lot of traders are positioned on the short side. Traders, institutions are really positioned on the short side of the dollar. So when they get lopsided like that, there's a risk of capsizing the boat, if you will. So when everybody's so bearish, we could see a recovery. Now that would mean that the euro has to break back above, or excuse me, back below the 112. 112.70 level in the euro. We'd have to break back below this purple line. You can see it right here. Or, the dollar index has to break back above 100.20, and then that would be pretty bullish for the dollar. I'm not quite in that camp yet. I don't know if the dollar bearishness has completely played out near term. I still think that we're going to be data dependent this week, especially with the jobs data with PCE. But I think we have to keep an open mind. If you've been a dollar bear like I have since the euro is at 105, 104, it's time to start thinking, okay, can we get a bit of a recovery in the dollar? That means the euro pulls back towards 110 before a continued rally in the euro or a continued sell-off in the dollar. So in other words, can we bounce a little bit before we sell off more? All right. I also want to mention at this point in time, I'm going to bring in Nick from Trading Analytix. He's going to join you, and he's going to talk a little bit about the S&P, some individual stocks. I'm sure he's going to be covering whether it's Microsoft or Meta or Apple or Amazon. He's going to be talking about a lot of those companies since so many of them are reporting earnings this week. So make sure you all stick around for Nick. I'll see you back here in just a few minutes.
Hello everybody, this is Nick Groves with Trading Analytics. Blake, thank you as always for passing it over to me. And we've certainly had another fun week of headlines and a lot of chop. So let's go and talk about it. So we came up to this bear zone that's really capped us since April 9th, okay? And we did have a giant 9% gain on April 9th. And, you know, one of the things that we highlighted is that just because you have a big gain doesn't mean you're necessarily going to all-time highs. You can have some chop and even some 2-week double dips. I think we saw that. You know, we did dip down at one point, I want to say around 50%. And so, yeah, even a little bit below there, things were looking a little bit gloom. And then we saw some headlines come through that really got this market going again. We've talked in the community about how this zone here has been key resistance. It's really been a nice line in the sand. For me, it's nice to have a line in the sand. It also means some trickery can also be around it if a lot of people are looking at it. So we banged our head up on it once, twice, third time, and then we were taking a look at it throughout the week and we said, okay, well, you know, it pulled back to 38.2 and held it, and it started mushing up a little bit higher. And I thought, okay, I think we're definitely going to break it. But now that we've broken it, I want to point out we are at key resistance. Okay, we are at the underside of former support. That capped us pretty well. You know, we had the tag in April of 2024, another tag in August. We tagged it on the 31st of March, bounced, back tested, broke it. So this is a key level here around 55.28. I also saw an interesting little comparison from 1998 that did catch my eye. You know, we've been tracking it relatively well. Here's the thing. I'm not saying that we're necessarily going to blow on higher like we did in 1998. What I am saying, we should maybe consider the idea, you know, this is maybe our current 54.70. We got above it. Maybe it only goes a little bit further and then actually declines. I think that that's still possible, and really what I'm doing is just talking about the odds of, you know, anything can happen, you know, playing devil's advocate. We have to be aware of any type of situation that could occur. So if we're going to push up a little bit higher, let's say we clear this resistance level, more people get long, I would not be surprised if we popped up to the 618 around 56.40, 56.50, and just made another lower high, right? We're still in a bear trend. We've had a high, a low, a lower high, a lower low, a lower high, and we might still get another lower low. I think that's definitely possible. So I'm hesitant to simply start pressing long after we get out of this range, which we have been in for most of April. So I'm looking at around 56.42, potentially up to 5,700, maybe somewhere a little bit higher. As long as we're below this high in late March, the trend is still pretty bearish, and you could even argue if we got up a little bit higher, maybe it's another one. But here's the thing, I'm hesitant, right? And where is support on the downside in the S&P? Well, you know, I would say from a smaller time frame on the 1 hour, you know, this gap here, it did fill in futures, but it did not fill in spot. So I would say 5,300 is your first line of support in the event we get down there. But I would also say trendline support by the time we get there, 52.70 or so. This should act as a decent zone of support that the bulls are going to want to try and hold. And those are some things that I'm looking at. And one of the reasons why I feel, yeah, we could pop a little bit higher, but we haven't had, the headlines that we've had haven't been all that concrete. Okay, I know the tariff pause was, but you'll notice every time we get up near 5% in the US 30 year, you start to get headlines out of the current administration. You had the tariff pause, and then a slam on China, and then, you know, we creep back up here, and there's de-escalation with China, quote unquote. I'm not too sure if we actually had de-escalation with China. It was more just words said that we're going to take it easy on China. So I don't know if that was honest, and I'm still waiting to see if China fires back. So that's why I'm saying there is a risk where things look rosy and it's just right back down. We also have earnings next week, okay? Next week is crucial. We have Microsoft, Meta, and Apple, and those stocks alone really account for a big portion of the S&P. Now, we've had some earnings this week. Let's talk about it. We had Tesla. Tesla's earnings came in pretty bad, and the stock is still higher, coming up to resistance here that we've been looking at. So here's the thing. The Mag 7s are all coming into earnings after really a 30% decline in most of them. So the earnings are either going to be viewed as can't get any worse, let's buy it. But the forward guidance has been lacking so far, and I think it's going to continue to lack. Yes, Google came out yesterday with some good earnings. So we've had TSM good earnings, Tesla terrible, Google good earnings. We'll see what the rest of the landscape looks like. Maybe there's a little bit of hope, but I think we should be cautious. Now, let's also talk about crypto. You'll notice that Bitcoin woke up this week. Let's go to the weekly chart. What you'll notice is that it's had a huge gain this week, up 11%. And it's getting back into this range where we were at all-time highs. Could it continue on? I think it's possible. Let's also take a look at one that's a little bit more, the risk reward's a little bit more favorable. Ethereum, in the event it can get going above 1820, but really if it can get above, I would say 1880, 1900, that's where things start to get interesting, because from a weekly standpoint, it has broken down, but we could get a false breakdown that leads to a breakout. I know that sounds crazy, but I think it's possible. All right. If you're looking for more content like this, please follow us on Trading Analytics, and I'll see you all very soon. Thank you so much. Cheers.
Thanks, Nick. Thank you for updating all of us regarding your analysis. I'm sure it was great. I get to see your video after the fact, so I'm sure it was wonderful. Thank you again for joining us. And make sure you follow Nick. He's at Trading Analytix on Twitter, or you can follow him personally. But make sure you look down below in the description of the video, especially if you're watching us on YouTube, and follow him on Twitter or on X. All right, let's talk at this point in time. Let's talk a little bit about how I feel about some of these other markets. Gold. We were talking about this week, and especially the last couple of days. If you've been on the morning edge, and let me show you what I want to show you here with gold. So gold has hit the 161% extension and stopped. Not of that move. Sorry, it's of this move. I think, which is the last move that we hit the 161% extension of, or 261% extension. I'm sorry, that's what I wanted to cover. There it is. Of that high to low, we came within just a couple of points of that 261% extension and stopped. Now, intraday, gold, and this is something that we've been talking about in the chat rooms. If you want to see our conversations on gold, you can just go over to the general chat room here. Take me just a second to pull it up for you guys. You go all the way back to earlier today. We were all joking around about being the boat lopsided. Oh, just so you guys want to know, my drawing here is a good one. Look, that was me. I drew that. I'm like, hey, here comes the capsized boat, and that's me. So, like, you guys be careful, you're gonna run me over. We joke around in the chat room, of course, obviously, but we were talking about gold's head and shoulder pattern, and then also Michael was talking about not only that, but he was also talking about the bear flag in gold. You can see it, bear flag. We were talking about the bear flag and also the head and shoulder pattern as well earlier this morning, and also yesterday, which happened to be on Thursday. And that head and shoulder pattern looks something like this. So I think we should all be paying attention to it, because should we develop this head and shoulder pattern, should we start to break down, it could kick off some sort of pullback towards what I would consider very, very critical support. Now, this doesn't necessarily make me a bear, so to speak, but what this does is it does tell me that we should be very careful about being long until we can get back to, some more moderated trend here. So until we could get to a better trend that would look something like this. So that's what's happening with gold. I think gold, you could pick it up on a dip. I still think it's very bullish. I think the reasons to be long gold haven't changed. So just buying dips makes a little bit more sense. I also want to talk about copper. Copper stopped at the 618. We discussed it last week. It looks like it's going to roll over, and it looks like it is in process of at least pulling back. We never filled this gap. And, this is one of those things about copper that I thought we would do is we'd fill this gap and then roll over. That just has not happened as of yet. I did also want to talk a little bit about Bitcoin, because Bitcoin, as it did break out to the upside, we are now coming very close to the 618 retracement. You can see that 618 retracement is from the all-time highs to this low. Here we go. And we just hit the 618, which is right here. You can see it right there. So now that we're there, I would not want to be on the long side of Bitcoin. So looking for it to be a short from here, that makes a lot of sense to me. So that's Bitcoin. Let's move right along to, I want to take just a quick look at the S&P. I know Nick's already done this with you guys. Matter of fact, you know what? Scratch that. I'm not going to do that. I'm not looking at the S&P because I'm going to have to look at it in just a few minutes anyway. Let's go over to the 10-year, and the 10-year has been struggling right around the 200 DMA. Let's go over to the daily chart. You'll notice that we are just on both sides of the 200 DMA and the 50 DMA. We're obviously just slightly above, but see that range? Again, I'm showing you all these ranges that are developing in the markets. It's important, right? It's important that you understand that these developments are going to yield us some big moves. So when I say that next week might be one of the biggest weeks in the market, I'm not joking, because I think there's a lot of asset classes that could really show us the way over the course of the next couple of days. Now, before I get into my top trades of the week, and I review the trades from last week, I want to talk a little bit about the volatility that we're seeing in the markets, because as you can see, the VIX is still pretty high. Now, it's come off a little bit, continues to come off, but I still believe that volatility is still at a very high level right now. Even right now, you can see volatility is starting to tick up today, intraday. Now, with higher volatility brings a lot of trading opportunities. And this is where I'm going to talk about the trader funding program. If you need some funding as a trader, there's two ways to go about it. Go to the trader funding program right on ForexAnalytix.com. Go over to the trader funding program. Okay. When you do that, you can get instant funding. So you can get instant funding up to $100,000. So if you don't have a $100,000 account, but you want like a $5,000 account or a $10,000 account, or maybe even up to $100,000, you can go through the instant funding. So you have, $25,000 account, $50,000 account, $100,000 account. Those are different accounts that you can access. Now, the other way that you can go about, you have to excuse me, everything seems to be moving right now. It's slowing down my computer. You can actually go into our one-step assessment, which is the, more inexpensive way to access capital, but you can actually access larger amounts of capital. Now, you can access up from $25,000 all the way up to $1 million, but you have to pass an assessment. What the assessment is, it's unlimited time. You have to make 10%, but you can't lose more than 6% on a high watermark basis. That means that as your account goes up in value, you can't lose 6% of what you've from the high watermark. Okay, you can't lose more than 5% intraday, because that would suggest that you are having a very difficult time managing risk. And then also, like I said, you have an unlimited amount of time to do it. So if you think you can make 10% without losing more than 6%, then check out the trader funding program and the one-step assessment. Like I said, if you don't have $1 million to trade, if you don't have $25,000 to trade, and you can also have access to ForexAnalytix, our trading community. You can actually know right where I'm getting in the markets. You can say, well, wait a second. So while I'm trading here, I can say, oh, Blake just got triggered short the euro sterling at 85.59. And you're like, oh, wait. So Blake is shorting the euro sterling at 85.59. And, I want to be short that as well. Well, you can do that and be part of our community as you're going through the one-step assessment. So check out the trader funding program. You can find it right on our website. And now let's review actually the three setups from last week. So the number one setup, or the first setup from last week, was selling the euro dollar if it reached 119, but it could reach 120. Well, that didn't happen. So it never got there. So trade setup number one, yeah, we were looking for this bull flag pattern. We never got there. All right. Trade setup number two, and something, by the way, should have just happened in the markets, because you can see the S&P is actually selling off a little bit right now. Just FYI. And matter of fact, we can go over to ForexAnalytix. Let's see what that headline was. Because you have, oh, here it is. Trump says won't drop China tariffs unless they give us something. Well, that would be the reason why the Aussie just sold off probably about, about 10 pips or so. The Aussie yen just sold off about 20 pips. So guys, if you want, you can get this information, access to it through ForexAnalytix right here through the live feed through Live Squawk, which is one of the many different tools that you get inside the ForexAnalytix community. So going back to what I was saying about the review. All right. Euro dollar didn't quite reach the 120 level. That's okay. If that trade setup did not happen as we had hoped, but sometimes, you plan for trades. Sometimes they happen, sometimes they don't happen. In this case, they did not. So one of them scratched, didn't work, didn't come out. Not that it didn't work, it just didn't set up the way we hoped it'd set up. Trade setup number two. Sell S&P on a break of 5,100 or short at 5,500. Well, that worked actually twice now. So the first time around, earlier this week, I actually had so many people actually mention that they shorted the S&P once. You could have made money. Now, if you're short again, we're basically at 5,500 right now. So did that trade setup work? Yes. And you can actually go into our trades room and talk to traders that actually took S&P shorts at 5,500 this week, and you can see how well they did. So trade setup number one, it never happened. Trade setup number two worked. Trade setup number three, short dollar yen below 139.50 for the head and shoulder pattern. Well, that never happened either. So not that it didn't work out, it just we never broke down below 139.50. So never triggered. So out of the three trade setups, two didn't happen. One worked out great. That's not bad. Those were your three free trade setups from last week. How about for this week? Well, here you go. This week, we're going to sell the S&P if we can get a rally to 56. We're gonna see if we can sell a rally to 56. Where is it? Oh, geez. Let me go ahead and it's 56.50, but let me show you why. All right, here's the S&P. It's a little messy here. I just realized that I've got to do a little bit of work with you guys here since I haven't done this in a while. Okay, so if we take the all-time high, and let me delete some of this stuff, right? Let's delete that. We can keep it there. And we're going to get rid of that. Okay, so if you take this high to this low, you'll notice that we're at currently the 50% retracement. Yes? Yes. 618 retracement is right here, which is a bunch of previous support, which is acting as current resistance. So trade setup number one, if we make it to 56.50, I'm looking to be on the short side. That's trade setup number one. Trade setup number two would be sell the euro dollar on any move. Now let me do this with you guys, okay? If you look left, I want you guys to look left really quick. Okay. Right here? No. That's it. We're going to do this. All right. You have 1526 right here, but I actually want to look at 11650, which is right here. Actually, that's not 116.50. We have to go up, which would be right here. I have to look at my notes. I'm like, where did I write that down? 116.50, and the reason why I want to do 116.50 is because we know that the highs and resistance is at 115, right? We already know that. We've talked a lot about it. So there's your resistance at 115. Now, if we reach for 116.50, that means we make a new high in price. But I feel that if we make a new high in price, and let's delete this, if we make a new high in price, we're not going to make a new high in relative strength. So if we make a new high in price, but relative strength does not, I'm looking for a short at 116.50 for next week. Just a counter trend trade for a move back down to 113. Okay? That's trade setup number 2. Trade setup number 3 is sell US dollar Mexican peso on any rally to, now, you know, we had this big rounded top. We've talked a lot about it. We are at the 127% extension. You can see there's the rounded top. I already drew that out for you guys however many weeks ago. I'm looking for a move back up to 1984 for a short. As I've told you guys multiple times over the course of the last several weeks and several months, that any move like that in the US dollar Mexican peso, and all these trade talks are going to benefit Mexico over the dollar, and eventually the dollar Mexican peso is probably going to trade down towards 18. So I want to use this opportunity on any bounce to sell into it. Guys and gals, if you think this video is just paramount and it's so important for you every single week to get prepared for your trading week, give me a thumbs up, give the team a thumbs up, smash the like button. Love this video. And I want to thank you all for spending your time with me. I know your time over the weekend is so vitally important. Your own personal time, spending with me means the world to me. So give me a thumbs up. Talk to me down below in the comments. If you have anything that I might have missed that you think is important, bring it. Love to talk to you guys about it. Have a great day. Have a great remainder of your weekend. I will see you on the Monday morning Face Show. Have a great one. Bye-bye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.